Up 25% in just the last couple of months. You know, we've talked about this how many times, Scott, where it's probably the most gamed stock in the market because it reports when no one else reports. It's a bellwether for not only the U.S., but the global economy, and also for the technology economy and the e-commerce economy.
So what do you do then now, given the pullback, especially since the company's not giving any guidance?
Oh, you know what? I'll tell you what. They can continue to give no guidance as long as they want, as long as they do what they just did. 19% growth in revenue, 14% growth in expenses, so net income was up 120%. They can continue to give me no guidance all day long if they can continue to report that kind of leverage. Revenue grow faster than volume, which grew faster than expenses. That's awesome. And CapEx guidance remained the same. And they report on the cash flow statement that basically their conversion ratio of net income into cash is running so far through the first 2 quarters of their fiscal year at over 155%. So it's real earnings, the kind of earnings we like to invest in.
Do you expect that we'll get anything on the call about pricing?
They're going to talk about their pricing power, which they've got tons of right now. They're going to talk about, hopefully they're going to give us some idea of really how much better can these margins get, because the margins just continue, and all 3 of the major divisions continue to improve handsomely, really surprising to the upside, especially in freight.
I know that we joke, and you clearly, tongue-in-cheek about the guidance or lack thereof, but in all seriousness, when should companies like this be able to give some semblance of guidance to help people like you and our viewers out?
Well, I think that is coming in the not-too-distant future. Their fiscal year ends at the end of May. And so I wouldn't be surprised to find out that if not the next quarter, certainly by the end of this fiscal year, if they would. But, I mean, if you look at their results, they're having more fun than a pack of beagle dogs playing in the new fallen snow. I mean, these guys are having so much fun right now that it's I'll forgive them not giving me guidance. And let's face it, the global economy is just damn hard to predict right now.
I'm not sure fun, but they're certainly getting a lot of business between the e-commerce boom. I guess they now have to deal with the vaccines. Donald, how does FedEx compare to UPS, the stock price and the performance of the business?
Well, we continue to favor a company that is non-union, run by the quintessential American entrepreneur, versus a more custodial management team that runs a unionized workforce. Consistently, year in, year out, FedEx just grows its revenue faster and has more operating margin potential than UPS does. That's been the case since UPS went public over 20 years ago now.
Don Broughton, good to get your first take. Love the enthusiasm.
Always.
Thank you.
Thanks for having me.
Shepard Smith here. Thanks for watching CNBC on YouTube.